Investors in virtual currencies are paying attention to two issues in 2024. This year, the price of Bitcoin, the largest virtual currency and a measure of the health of the virtual currency industry, has doubled in a half. The virtual currency market is entering the final weeks of 2023 in a vibrant state compared to the beginning of the year. Analysts predict that in 2024, the focus of virtual currency investors will be on the interest rate policies of central banks and whether the U.S. regulatory agency will approve the launch of Bitcoin spot exchange-traded funds, ETF. 2022 was a challenging year for the virtual currency industry, with the price of this asset sharply declining, accompanied by a series of scandals, including the collapse of the FTX virtual currency exchange and legal accusations against Sam Bankman-Fried, the founder and CEO of the exchange. All of these events have undermined the credibility and image of the industry. However, this year, in 2023, the price of Bitcoin, the largest virtual currency and a measure of the health of the virtual currency industry, has doubled in a half, approaching the strongest annual increase since 2020. Just last week, the price of Bitcoin reached nearly $45,000, the highest in 20 months. Two factors supporting Bitcoin prices. According to data from COIMarketCap.com, the price of Bitcoin around noon today, December 13, Vietnam time, stands at $40,834, a decrease of more than 2.4% compared to 24 hours ago and nearly 7% compared to a week ago. The virtual currency market is being supported by the expectation that a downturn in inflation will allow major central banks, especially the U.S. Federal Reserve, Fed, to begin lowering interest rates in 2024. A decrease in interest rates will make higher-risk assets such as virtual currency more attractive. In addition, the market is also placing great expectations on the U.S. Securities and Exchange Commission, SEC, approving the launch of Bitcoin spot ETFs. Such funds are believed to attract a large amount of institutional investment into the virtual currency market. According to analysts, these factors, along with the halving event, the process of halving the reward for Bitcoin mining expected to take place in April, will support the price of Bitcoin and the virtual currency market in general in the coming year. Halving aims to gradually reduce the new supply of Bitcoin to limit the total amount of Bitcoin in circulation to 21 million, of which 19 million Bitcoins have been created so far. To date, Bitcoin has undergone 3 halving events, the most recent in 2020. However, some analysts are cautious and believe that the price of Bitcoin is unlikely to surpass the record set in 2021. The Bitcoin bubble burst due to rising interest rates. And what could potentially restore the price of Bitcoin is a decrease in interest rates, said James Butterfill, chief researcher at digital asset management company CoinShares, in a statement to Reuters. Bitcoin reached a record $69,000 in 2021 thanks to the buying power of retail investors who had a large amount of cash in the early days of the COVID-19 pandemic and in a historically low interest rate environment. According to Andrea Filtri, a researcher at Italy's Mediobanca Bank, the cessation of interest rate hikes by central banks and the possible shift to interest rate cuts are beneficial for risk assets. But the current conditions in the virtual currency market are far different from those in 2021. Although the financial market expects the Fed to lower interest rates in the first half of 2024, Fed officials have signaled that they will not lower interest rates soon. Recent U.S. employment and inflation figures suggest that expectations of an interest rate cut early next year may be premature. Economic experts also believe that the Fed may only lower interest rates in the second half of 2024. Virtual currency easily rises in price when there is a lot of cheap capital. I'm not sure if when interest rates decrease, financial conditions will return to such a favorable state, said Filtri. Expectations for Bitcoin spot ETF. Despite the challenges, scandals have not let up in the virtual currency industry this year. Among them is the case of Binance and its CEO Changpeng Zhao admitting to violating U.S. anti-money laundering regulations. However, the launch of Bitcoin spot ETFs will help legitimize the virtual currency industry. A series of major financial companies, including BlackRock, have submitted applications to the SEC to launch Bitcoin spot ETFs. According to analysts, the establishment of such funds could attract billions of dollars in institutional investment into the virtual currency market. Reuters recently reported that negotiations between the virtual currency industry and the SEC are intensifying ahead of a crucial deadline in January. This is the time when the SEC is expected to make decisions on approving some applications for Bitcoin spot ETFs. This makes traders very optimistic, although sell-offs could still occur. The price of Bitcoin may adjust immediately after the launch of Bitcoin spot ETFs, as the approval has already been reflected in the market. However, in the long run, such funds could attract billions of dollars in investment capital to the Bitcoin market, said Yuya Hasegawa, an analyst at the Japanese virtual currency exchange BitBank.